market crash or warning? If you recall, last Thursday, we had the GDP number. And then Friday, we had the PCE number. The PCE number is the important one because that's the one that the Fed looks at for inflation. When the PCE number came in, everybody got excited. They said, oh, look at this. It wasn't too hot, wasn't too cold. Because see, with your GDP number, you want to come in better than expected because then you get a big rally. But if that happens with the PCE number, you get a sell-off. So they made sure it came in just right. And then everybody went nuts. This is it. This is it. They're going to do rate cuts. They're not going to wait until September. They're going to do them right now. They're going to start at this meeting in July. And I said, no, they're not. I said, you're going to lose this whole 700-point rally because this is nonsense. Here's what I said. Next week at this time, I'm going to tell you that all the gains that they got, all these gains in the S&P right here, all these gains are going to be for naught. Just watch Nvidia. That's right, because I've been saying Nvidia is the key. And we've been doing pretty good with Nvidia. Not only did we catch it on the way up, but about a 40% gain, we shorted it on the way down. I said if Nvidia breaks, especially if it breaks its support, the 50-day moving average, everything's going to follow Nvidia. And so far it has. But I said, this is crazy, this 700-point rally. Because first of all, to say they're going to cut rates doesn't make a lot of sense. Because remember what's going on. We have inflation still in necessities. We have inflation in all the things we need, whereas gasoline, food, rent. And what are we finding out? Folks don't have any money. They don't have any disposable income. After they're paying their necessity with gasoline and everything else, they can't go buy big screen TVs or furniture or appliances because they have no disposable income left. And then what we know is they've been laying off people left and right, and the manufacturing has been terrible. But that's not what we've been hearing from the White House. We keep hearing from the White House, wow, things are great. Manufacturing's great. So that 700 point that we were talking about, that big rally, and I said they'll give it all back within a week. Well, they gave it all back less than a week, one day less, Thursday. And we were right because they came out with some numbers. Guess what the numbers were? The labor market's terrible. Oh, and they were surprised. How can they be surprised? Because they never give us the right numbers. They said the labor market's really, really strong. And we're finding out it isn't, that we have more people applying for unemployment checks than they ever thought. And the jobs, remember, are not strong. We're losing 1.8 million full-time paying jobs, okay, in the last 8 months. And those are replaced by low-paying healthcare jobs. And by the way, when you hear all these jobs, they're healthcare jobs, and healthcare jobs are government jobs because they're paid for by the government, because they're subsidized by the government. So when they came out and they said, oh, this labor was so strong, here, I'll play this cut. Listen to what they're saying here.
Very strong labor market.
The very strong labor market.
The employment rate is still one of the lowest we've had in history.
That would point to the labor market.
Given how strong the job market.
And that's not true. And that's what happened. And that's all of a sudden, everybody was stunned yesterday, and the market starts collapsing. And then it followed through today, which is Friday. So the labor market is not strong. It hasn't been strong. They've been lying about the labor market. They've been telling us how Biden's created all these jobs when he's taking credit for these jobs that were closed down during COVID. And then when they reopened and went back to work, he would count them as new jobs. Well, now they're finding out the labor market wasn't strong and isn't strong. And that's a big problem. And the biggest problem is they can't keep covering them up with government jobs. They've been masking it with government jobs. So that's why the market started to collapse. But it didn't just start collapsing yesterday. we've had many messages from the market telling us that this market wasn't going to hold. Let me show you what I mean. If you take a look at this chart right here, I pointed out a long time ago, months ago, I said, look, this is your utilities and the spiders. Why do we follow those? I always tell my gang members to follow these because, remember, any time that there is going to be a big correction in the market, the big hedge funds, the big players put all their clients in utilities. Not only do they have good dividends, but they're safe. And that's what happened right here, right before the COVID. Look at this. All of a sudden you start seeing utility stocks going up, like Duke or Edison. And exactly what happened. It's a warning because everybody is pushing their clients into utilities because they know a correction is coming. And there was the correction, 2020. Then we had this next big rally. And then also they started to increase interest rates. And that was, let's see what date that was. That was in, I think, July of 2022, I think. Or 23, was it? 2022, they started to raise rates to fight inflation. And as the stock market was rallying, before they started to do that, raising rates, all of a sudden utility stocks started to go up. Look, everybody was jumping into the utilities because the big hedge funds were putting all their clients in. And what happened? Just like back here, they were right. The hedge funds were right. Bam, we had that big collapse. And here we are again. This last big rally we're in now, right? Same thing. We're starting to see everybody jumping into the utilities. They always give you a warning. So that is just one of the messages from the market warning you way before today, okay? And then not only that, we had on top of that the spiders in the transports. Same thing. When you get a divergence where all of a sudden you see the spiders going up, but the transports aren't going up, that means the economy is really slowing. They're not delivering what they're manufacturing. That's a big warning. I've warned about this long ago. Another chart that's very accurate is this one here. I always give my clients this one. This one here is times when the unemployment rate crosses above its own 24-month moving average. You always have a big correction. Look, it happened right back here. The S&L crisis happened back here with the big tech dot-com crash. Happened here with the housing financial crash. And it's happening now. This is never wrong. So see, we get plenty of messages from the market, and you got to watch that bond market. But to sit back and listen to everything everything's being said by the fake business network and the White House, especially during the election year, it's unbelievable. So what we've been doing, okay, again, is, and we've been telling my members have been with me for years. And remember, I've been doing this business, I've been trading for 50 years, but Phil's gang, okay, where we've been teaching people for 25 years. In the last year, we've been warning people that, look, this market, these prices of these tech stocks are going crazy, that you got to be prepared to sell short. At least be prepared. But nobody wanted to prepare for being short. Nobody wanted to short. And that's why, remember this, 80% of retail customers lose money because they only buy stocks. They never prepare for the day that the market's going to go down. So when the market's down, like today, almost 1,000 points, they're not shorting. They're sitting back, and then all of a sudden they get scared and they jump into the bond market and they start buying bonds. And you got to learn how to sell short. So let's take, for example, this, my stock, Nvidia. Nvidia, my clients, we had them in right here. My chart, which these charts I designed, 25 years ago. These are 25-year tested charts. These are really advanced color-coded charts. It follows the money. That's what you want to follow, is the money. So we followed the money into Nvidia. And when Nvidia was going up, I was warning people. let's follow the money. But in my heart, I'm telling you, we are going to have a crash. We've been going 15 years. They've been printing all this money to put into the economy, put into stock market. They're spending more money, the government, than in tax revenue. They were building tremendous deficits. It doesn't work. So Nvidia started to collapse right here. And I told them, if Nvidia breaks the 50-day moving average, everything's going to start going down. Next, we said, let's short Micron technology. Same thing. Right here. Our color-coded chart sent us a signal that money was coming out. Again, follow the money. We'll show you how to do it. We'll show you how to do it. This is one of our stocks, Micron. And look at this. We've had about, a 20%, about Micron, about 20, 26% gain, shorting it. Qualcomm. We bought Qualcomm on the way up because we had a buy signal. It turned green. See, my charts make it really simple. It turns green for you, okay? And then if money's coming out, it'll first warn you by going back to yellow. But it's not just the color-coded charts. You got to have experience behind it. You got to read the volume. You just can't sit there and say, oh, it's red or green. No, it works, no question. But you got to also be following the volume. You got to understand the relative strength. You got to understand, and this is what we teach. So here, we bought it on the way up, and then look, another short. So the bottom line, what I'm trying to say is, Nvidia, we made money going up, but we made money shorting. Well, people are sitting around today getting killed. Same thing with Micron technology. Yes, we made money when it went up, but we're making money as it comes down. There's nothing better than that. In Qualcomm, same thing. Look at the money we made going up. Look at the money we made going down. Look, the yields. Everybody's focusing on rate cuts. That's fine. You got to focus on following the money. You got to focus on follow the money. That's what I'll show you. Okay? And look, 10 days. Why don't you just join me for 10 days? Don't charge you anything, and follow my stock picks. The gang stock picks. Do it for today. It'll be fun, but you're also going to learn how to sell short. That is your weapon, not buying bonds or buying Procter & Gamble. Remember, when a market crashes, there's no place to hide. You can buy Coca-Cola, you can buy all those defensive stocks. There's no place to hide. And do you really want to go in and buy a bond, a treasury, when you can turn around and simply short a stock and make more money on the way down and much faster than the way up? Put yourself in a position that you make money in both directions. So that's it. So please hit subscribe, okay? Like and share. I'd appreciate that. And join my gang. Just check it out. philsgang.com. 10 days free, and I'll help you. Well, we'll see you on the charts. Follow the money, not the BS.